Hello everyone. So welcome to the third module. Today we are going to discuss something about capital market. So in this particular session, we are going to deal what capital market is all about, then what are its important features, then we'll be looking into the different components of it. Okay. And other than that, we'll be learning about its importance and recent developments and the defects in the Indian capital market. Are you ready? Come, let's move. So starting with the meaning. So what does it mean? What does capital market mean? Capital market is a market where the investment instruments like bonds, equities, and mortgages are traded. So what do you mean by mortgage? Something where you have some assets where you pledge and then you take the loan like that. So it can happen in that form too. Then it's a market which deals in long-term loans. It supplies industries with fixed and working capital and finances the medium-term and the long-term borrowings of the central, state, and local government. It provides long-term debt and equity finance for the government and the corporate sector. It enables the dispersion of business ownership and reallocation of financial resources among the corporate and industries. Then its major function is to make the investment from the stockholders who have excess funds to the ones who are running scarcity. So whoever is having scarce funds, they will be helped in such a way that the pumping of funds, pumping of capital can also be done. Then we have next is capital market provides the long-term and overnight funds. As and when required, the funds will be produced with the help of the capital market. Next, let us see this. In a capital market, the lender is the one who tries to borrow the funds. So the lender or the one who gives, that is called lender. So in case of the capital market, the lenders have preferences, that is to they have preferences to the maturity of the loans that they make. So whatever the loan they are taking, that the maturity that they have to get, that also is considered. Then the ease and security of liquidating any assets that they purchase. Then the amount and the kind of risk that they are willing to bear it, or which they are willing to take it up. The regularity of the payments that they wish to receive, and finally the price that they are getting for lending the capital. So these are the things that they are considering by the lenders in the capital market. Now let's define the concept of capital market. According to Grant, capital market is a series of channels through which the savings of the community are made available for the industrial and the commercial enterprises. So this particular, it's a series of channels. It's a market where you can find different securities are being traded, and it's mainly for the benefit of the industrial and the commercial enterprises and for public authorities too. It embraces, it welcomes not only the system by which the public takes up the long-term securities. Not only they take up the long-term, but they can also take up the short-term or the medium-term lending too. Now let's see the important features of capital market. So what are the important features? The first is it's a vehicle through which, it's a channel or a vehicle through which capital flows from investors to borrowers. Then it deals with long-term securities having maturity more than 1 year. Then all the operations in the new issues and the existing securities occur in capital market. It functions through different intermediaries like banks, merchant bankers, brokers, underwriters, mutual fund agencies, and so on. It includes different players like individuals, institutions like individual investors, then we have trust companies, then we have banks, stock exchanges, specialized financial institutions like SFC, that is State Financial Corporation, or IDBI, or we have LIC, and so on. It determines the rate for capital formation as it helps in mobilization of savings and funds. Capital market instruments are liquid as the investors can sell the securities and they can get the cash for it. The capital market provides incentives to various savers who are involved in the investment in the form of interest or dividend, and they help in transferring the funds to the investors. It diverts the resources from wasteful and unproductive channels like gold, jewelry, then you have real estate, all these things that it will be used, and it helps in the conspicuous consumption to produce more and more. Next, let us see the different types of financial instruments that are traded in the capital market. First is the equity instruments, which is nothing but common stock, retained earnings, treasury stock, preference shares, and so on. Credit market instruments like zero coupon bonds, deep discount bonds, then debentures, and so on. What's the difference between a bond and a debenture? Bonds are issued by government companies and debentures are issued by the private companies. Insurance instruments like LIC and so on, then foreign exchange instruments, then hybrid instruments. What do you mean by hybrid instrument? It's a financial security that combines two or more different financial instruments. For example, if you take two instruments like there is a gold and an equity shares, I can take both, which is called a hybrid instrument. And what is the benefit of that? The risk of one is compensated by the return of the other. So obviously, this particular return would compensate the loss of the other one. Next is the final one is derivative instruments. Derivative instruments are it's a market or it's a exchange of goods and services actually you can find where you can find that is a simultaneous transactions can happen. Okay, so what happens here is that here there is the value of this particular this transaction is determined based on the value of the underlying asset. So there are different types of derivative instruments we have: options, futures, forwards, and swaps. Options are nothing but it's a right or obligation. It's a right for the buyer and the seller to buy and sell themselves their goods. Forwards are nothing but the obligation. Futures are the standardized contracts. The difference between forwards and futures is that forwards is it's a customized contract, it's a tailor-made contract, it's a ready-made contract. And if you see futures, it's a standardized contract, and every limitation of the forwards is corrected by the features and advantages of futures too. Swaps is nothing but it's a simultaneous exchange of goods and services in the form of the different currencies in the market. Next, we are going to see is all about the different types of capital market. So what are different types of capital market? That is, the first one is primary and the secondary market. This also comes as a part of the features. Primary market is nothing but it's a market. It's also called new issues market. It's a market where you can find the shares are issued for the first time. It solely deals with the issue of new securities. It's a place where the trading of securities is done for the first time. The main objective behind the primary market is that it helps in the capital formation for the government, institutions, companies, and hence this is known as IPO, which is known as initial public offer. There are some important functions of primary market. We'll be dealing this in the depth in the coming sessions. First is origination. Origination is referred to as to examine, that is evaluate and process the new project proposals in the primary market. It begins priorly with the important objective to issue that is presently in the market. It's done with the help of commercial bankers. Please remember that. Second is underwriting. What is underwriting? Important question. For ensuring the success of the new issues of the market, there is need for underwriting firms. And this underwriting is nothing but it's a process where you can guarantee the minimum subscription. And the people who undertake this process is known as underwriters. In case the issue remains unsold, the underwriters will have to buy. But if the issues are completely subscribed, then there will be no liability left for them. Third is distribution. The third function of the primary market is distribution. For the success of issue, brokers and dealers are given job distribution who directly contact with the investors. So the three major functions: origination, underwriting, and distribution. Please remember that important question. The second type of market under capital market is its secondary market, or called, we can say capital market is also known as securities market too. Please remember that. Secondary market is a type of the securities or the capital market. It's a marketplace where the trading takes place for the existing securities. So here we can find there is an important activity called listing undertaken. Listing is the process of listing the companies, the companies which are listed already in the stock market is being traded. The trading is happening for such type of securities of such companies in the market. So listing is an important function that is happening in the secondary market. Secondary market is also known as stock exchange or stock market too. Here the securities are bought and sold by the investors. And here we're going to see some important functions like regular information about the value of the security, offers liquidity to the investors for their assets. Then we have continuous and active trading, and finally providing a marketplace. Let us see some important functions or importance or the functions of or the scope of the capital market. Important question. The first is mobilization of savings to finance a long-term investments. You can find it creates a plethora or a platform where you can find different securities are available, be it long-term, medium-term, or short-term. And here, whether you invest in whatever types of securities, the savings and investments are mobilized in order to finance for the long-term investments. Next, it helps in facilitating the trading of securities. Then it helps in the minimization of transactions and information cost. It helps in the quick valuation of various financial instruments like shares, debentures, bonds, and so on. It facilitates the transaction settlement as per the definite time schedule. So as per what is the time required, be it long-term or medium-term or short-term, the settlement for such type of transactions are also done. Then offering insurance against the market or the price risk through the derivatives trading, and also the creditworthiness risk or the default or insolvency risk is also covered through the help of Investment Protection Fund, IPF. Please remember that. Then we have improvement. It helps in the improvement in the effectiveness of capital allocation with the help of competitive price mechanism too. Further, other important functions are it helps in the direct flow of funds into efficient channels via investment, disinvestment, meaning to say privatization, and reinvestment, coming again to the investment process. It helps in encouraging the wide range of ownership for the productive assets. Then it helps in economic growth and development of the country. Then continuous availability of funds can be made available. Also, it helps in minimizing the transaction information cost. It's more economical. And finally, it helps in ensuring productive capitalization, capital utilization, promoting the national income in the country. This is how, what is the role of capital market in Indian development? Please remember that important question. Also, apart from that, we have another two important functions too. That is, it provides operational efficiency through three important things: simplified transaction procedures, lowering settlement times, and lowering the transaction cost. Next, it helps in developing integration among debt and financial sectors, equity and debt instruments, long-term and short-term funds. So these are the important questions. Please remember that the functions and the scope of the or role of capital market in Indian economic development. Next, we are going to see is all about importance and advantages of capital market. So what is important? Why is capital market very important? So first is it helps in the facilitating, the same points are repeated here, but just remember that, okay? So facilitates in the trading of securities, facilitates the transaction settlement, competitive price mechanism. Why? Because there are different types of securities with different prices. So obviously there is a competition between different securities, and be it the lower price category or the high price category, it depends upon the demand and supply of for such securities in the market, that the price will be changing here and there. So such competitive advantage is created in the capital market, which attracts indirectly the investors into this pooling of investment. Then it helps in promoting economic welfare through promoting more national income and the pumping in of more national income. Then we can find more economic development is also happening. So obviously there is economic welfare, provides liquidity because it tries to pump in more cash. Adequate cash balance is created in order to meet the uncertain future. So this also can be done. Then finally, it helps in the economic development through ways of capital formation, offering insurance against risk, investing more foreign investments can be injecting more of foreign capital into the economy, mobilization of savings, innovation activities are happening, innovative financial instruments are also created like derivatives and so on. Then we have encouraging the wide range of ownership for the productive assets. From the non-productive or the unproductive assets, we can make investments in the productive assets. And finally, it helps in integrating different parts of the financial system. So in this way, we can find the importance and advantages of capital market happening. But for every coin, there's a head and a tail. If this is the head for the capital market, obviously we should know the other part of that, the tail of the capital market too. So let's get into the defects or the weaknesses or the deficiencies or there is difficulties in the Indian capital market. So if you see this particular thing, the defects or deficiencies or weaknesses in the or disadvantages in the Indian capital market, the first is lack of transparency. Then we have a range of different securities are there. It creates more of monopoly or price discrimination is also created for different assets. Then lack of information disclosure. Then poor response from the small investors. Management, regulation, and surveillance of the capital is the lack of top management support can also hamper the strategies in the capital market. Then we can find that greater competition is also there. It need not be healthy, it can be unhealthy. So such issues can also be hampering the capital market issues. Then high volatility, that volatility means a frequent fluctuation because of the demand and supply forces in the market. We can find the prices fluctuating very often, increasing suddenly and decreasing suddenly, which is really going to hamper the investors at their own stake. Then dominance of the public sector. Sometimes dominance of the public sector can also lead to bureaucracy, red tapeism, corruption, and nepotism too, favoritism too. Then expansion of the investor base. Then supremacy of the financial institutions. Then monopolization of the financial institutions. Then absence of genuine investors. More of bias, personal bias and prejudices can overrule the investors' perception. So this they always need not be genuine or they need not be trustworthy too. Such situations can hamper the Indian capital market. Unhealthy competition of the merchant bankers. We're going to learn about the merchant bankers in the coming slide. Then we have, there is the problems of odd lots, or we can say unlisted securities. Sometimes the odd lot is nothing but which is the securities which are listed only can be traded, but which cannot be, which are not unlisted, which are unlisted, which are not listed, they cannot be traded. So sometimes this illegal trading is also happening. Then recent scams, corporate scams like Satyam scam or Harshad Mehta scam or Ketan Parikh scam. Different scams are also there, which really hampers and puts off the investors' confidence in the capital market. Lack of liquidity, the natural calamities like we find the current Corona time, Corona or we have Ebola or Nipah virus time. What happened? Obviously, that brought down the different sectors in the market. Obviously, some sectors were booming, like drug and pharmaceutical industry was booming. IT because of e-learning, online class and learning, online teaching. What happened? The telecommunication, information technology sector boomed. It got prosperity. But if you find in case of banks, it got down. Then if you find the FMCG, it gone down. Then if you see some other sectors, it also has gone down. All this is not to be blamed, but because of the natural calamities. So unexpected uncertainties can also create a big problem for the coming scenario for the capital market. Sometimes political gimmicks, that is a political gimmicks, meaning like many political parties can play a vital role in the share price falling down or going up. Okay, so politically sensitive stocks are created. Okay, so such things can also create a big problem. Presence of rigging. Price rigging is nothing but you try to sell it in one price in one market and sell that much more rate in the higher market, in the at a higher rate you're selling in the other market. So it's like arbitrage. Arbitrage is a process where once you try to buy it at low rate in one market and you sell it to other market at higher rate. So it's illegal. Then next is terrorism, war can also play a vital role. Dominance of insider trading. Insider trading is nothing but you try to function things in the organization and without the notice of your stakeholders, you try to disclose whatever is happening. The confidential information is disclosed to the other people and the other organization. So you become like a spy. Okay, so that's what's happening. And different range of securities also. These are the important defects we can find. So in order to correct these defects, there are some important recent developments made in the Indian capital market. Let's know that in detail. So the first thing is that protection of the investors' interest by SEBI. That is, SEBI plays, Securities and Exchange Board of India play a vital role in protecting the investors at their own interest. That is, if they are having sorts of grievances, all that will be redressed with the help of the forum that is being the Investors Protection Fund or the with the help of the grievance redressal committee created by SEBI. Then discouraging price manipulation, no price discrimination, reduction of high volatility, encouraging market making. You can dominate the market. If you find your product is highly sold and highly demanded in the market, then you can go for market making. Then introduction of depositories. The third parties like banks will be there between the transactions, so that some sort of regulation and supervision can be done, and whose wish that is every transaction can go more transparent and more secured manner. Then establish the OTCEI, over-the-counter exchange of India, or NSE, National Stock Exchange. National Stock Exchange in 1995, they had brought with NEAT, that is NSE Automated Trading System. This was also scriptless trading system, screen-based trading system. It was online trading, we can say. Stock watch system, then introduced negotiated dealing system, then interconnected stock exchanges of India Limited, that different stock exchanges are combining together and doing as a collaborative framework, promoting derivatives trading. We can find that derivatives is also one of the important instrument where you can find it's used for more of hedging the instrument. Hedging is nothing but the process of risk minimization by taking up the assets which are more credit worthy, and you can feel that the risk of one is compensated by the return of the other. Then introduce international listing, then introduce short selling, then we have that is automated lending and borrowing mechanism, then that is introduce gold exchange traded funds. Then we have there is economic liberalization. Then we have promotion of mutual funds, because you know that mutual fund works on one particular important principle. Small drops of water make big ocean, isn't it? Similarly, that if you make small investments, you get big return. So we have in mutual funds two important schemes, that is we call, we have different types of funds in that is growth funds, income funds, any different types of funds. But there are two important schemes, open-ended schemes and closed-ended schemes, isn't it? So that's all will be considered over here with sponsor, okay, and the asset liability management function also is done here. Then we have regulation of NRI investments, then direct foreign investments, foreign direct investments, or we can say the rise of foreign institution investors also can happen here. Increase the online trading, then promoting private sector banks to come in, then transparency in the online trading, measures to curb the insider trading, then also we can find that regulation of the intermediaries is also done, then changes in the management structure, then database of the clients are also kept very frequently recorded in a much secured manner. Then we have trade or settlement guarantee funds is also done. Then we have database is also maintained for the not only for the clients but also for the members and the brokers. Then we have clearing houses. That's corporation and settlement guarantees also done. And finally, we have the prevention of the price rigging. So these are the important points to be discussed. And in this today's session, we have seen about the capital market, its important features, its important functions, importance, need and importance. Then we have seen the role of capital market in economic development of India. Then we have seen the defects, the advantages, and also the recent developments in the Indian capital market. So in the coming session, we'll be discussing about the types of capital market in detail. Thank you.